Hello, I'm Dave Bolduc with the Bella Group. Thanks for joining me again for my weekly real estate market update. It's January 28th. I do apologize for the last couple weeks. I was sick and just couldn't get the videos done, but I'm back on track now. This week we're going to be talking about foreclosures and mortgage rates, which are a couple of things that my clients have been hitting me up about quite a bit. And next week we're going to be back to the normal first week of the month Connecticut real estate market update. So let's jump right into this. This first chart is a chart that I've shown in the past for forbearances. I did a deep dive, and I'll put a link to that in the video description below. But I added December 31st data, which is 1.41% of U.S. mortgages, of which there's 53 million U.S. mortgages. 1.41%, which is a little bit less than 750,000, are in forbearance. Just to make a point, if all 750,000 of those mortgages that are currently in forbearance went into foreclosure, it would only add about a month and a half of inventory to the real estate market. And this is just, as this slide shows in blue, December 31st, we had about 1.5 months of inventory on the market. So adding another 1.5 would get us to 3 months. Equilibrium, where we really want to be to have a good solid market, is 6 months. So we would still be well below that target of 6 months of inventory. There's a couple of things I want to point here. Supply is very low. We are continuing to see home appreciation because, as I'll talk about, demand is still high, but that low supply, high demand, basic economics prices are going up. This is a great time to sell. There's little to no competition out there, and again, you're getting great prices. So moving on to mortgages, this is a chart showing January of 2018 until today. And you can see the peak was close to 5%, and we're around 3.5 right now. And this quote from Sam Cater from Freddie Mac is, "As a result of higher mortgage rates, purchase demand has modestly waned in advance of the spring home buying season. However, supply remains near historically tight levels, and home prices remain high, keeping the market competitive." So there's still demand. A few people are coming out of the market, but overall, still strong demand and very low supply. So what are the mortgage rate projections for the rest of the year? Fannie Mae, Freddie Mac, MBA, NAR, a lot of experts in the mortgage industry are saying this is what they're seeing. So I'm just passing this along. I'm not an expert in the mortgage industry. But we're expected to see somewhere around 3.7% by the end of the year. I expect these forecasts will be updated since we're already at 3.55%. What does this look like on that first chart that I showed you? So adding those estimates per quarter in, you can see that it is an increase from where we've been, but it's still not a peak that we've seen in 2018 at around 5%. And I wanted to add a little bit more perspective to this and go back 50 years to 1971 so you can see what the interest rates look like there. And this is a chart. So the yellow line going across is 3.55%, where we are yesterday. And you can see there's a little bit of a dip below that, real close to the right side of the chart. That was those historic lows that we saw. But if you go back 10 years, 20 years, 30 years, 40 years, you can see that a lot of the interest rates were as much as 2 times or even more what we're seeing today. So 3.55% is still a really good rate. A couple key takeaways that I want to point out here. Data indicates that foreclosures are not going to flood the market with inventory. They're out there, but not in the numbers that are needed to have an impact. I have a client who's closing on a foreclosure in a couple of weeks. So they are out there, but it's just not having the impact that some people expected. Mortgage rates are still near historic lows. Supply is very low. Demand is very high. Millennials are out in force. Gen Z, 75% said they want to buy a house. They're out there buying today too. And home prices and mortgage rates are both expected to continue to rise. So if you're a seller, now's a great time. As I said earlier, there's very little competition. If you're a buyer, I can't tell you what's going to happen, but the experts are saying that mortgage rates are going to continue to rise and home prices are going to continue to rise. So with both of those trajectories happening, it's better to buy now than it is to wait. If you found anything of any value, please click the like button. You can also hit subscribe and ring the bell to get notifications. If you have any comments or questions, please comment below. My winter home buyers and home sellers guides are available. Links are in the description. There's no obligation. You don't have to provide any contact information. Thank you again for joining me. Look forward to seeing you next week when we talk about the Connecticut real estate market. Have a great day.